All right, guys. So someone asked a question from us in the chat room that why are we looking at the SPY? I mean, isn't it true that the stocks in play really don't have, shouldn't have any effect from the market and they should be independent? The answer to that is yes. The overall market shouldn't affect the stocks in play, and you really don't need to pay too much attention on the overall market condition. But we are not in an ordinary time of the market condition. The market has been really weak and selling off since October. So as you see, this SPY is an ETF that shows the overall market condition or overall market strength. Is the the composite of the 500 biggest companies in the market. And look at that size of this candlesticks since October. I don't know exactly what date, but just look at the size of the candlesticks. Very small candlesticks popping up and down, trading overall uptrend, and then the volumes are small. You see, I mean, this is just a normal condition. In this normal condition, you don't need to worry too much about the market because the market doesn't change a lot. There is not a lot of volatility. And then now we're getting in the middle of October, we are getting into the very unusual market situation. Market has sold off. We are entering a bear market, and look at the size of the candlesticks and compare with the past. So it's a huge sell-off. Market now is year to date. It's negative. It means that the market, a lot of fund managers are, negative. They don't have any return if they have a lot of assets on the stock. So now there is a lot, and obviously what you can see, the volume is also significantly higher. That's true for pretty much everything. In these conditions, you have to pay attention to the market because the big orders would come and affect your trading. For example, you are trading a stock in play. You think it's independent from the market, but suddenly a fund manager with $200 billion asset under management, they order their traders to liquidate their position, and then the sell orders are coming. They don't care about the price action. They have the order. They want to move their position from stock, for example, to the bond market or to the gold or to the commodity. So those orders would affect your stock. That's why now in this condition, we have to pay a little bit more attention to the market because these are really extraordinary conditions. Market is selling off. We are in a bear market territory. We lost all of these moving averages. A lot of people are still bearish. They think we still have more room to the downside. A lot of people might say, oh no, it's actually a good opportunity, let's buy. So this is an area that you really need to pay attention on that. Another thing that I just wanted to mention that is when the market is selling off, most of the rallies happen when the stock is actually selling off. So look at this. For example, how long did it take to we make such a move, from, for example, 280 to 285? But now, you see in a matter of, few days or few weeks, you move from 262 all the way up to 280. So these big rallies usually happen when we have the big sells off. So these conditions are the conditions that you got to be really, really careful. Even though you're trading the stocks that you expect to be independent of the market, because they have some fundamental news, you still have to be really careful trading them because these are not these are not ordinary market condition. And again, just go back in time and see that. I mean, you see just compare the volume and size of the candlesticks. Again, we had, in early 2008, we had some stuff going on, but the market really calmed down and then it started an uptrend. But I would say this is again an extraordinary time. So you could just look at the size of the candlesticks in the SPY and now compare that. I mean, this is the normal condition that everyone was just an uptrend. All right, guys, have a good day. And then that was a question that I think it was worth. Again, we had that back in early 2018. So the huge drop. So in these extraordinary conditions, you have to pay really, really attention to the market. And that's why Brian is putting these market recaps. So these market recaps is not only for swing trading, but it's also give you an idea of what's going on in the market. And I highly recommend you watch them. They're really good. Brian has been a really good swing trader, so he has a really good understanding of the overall market condition. Even if you are a day trader, watch his weekly recaps and see what he believes about the overall market condition. It's really, really difficult to trade a swing trade these days because, again, swing trading is much, much more complicated now because you can't really find any direction. Market is really uncertain. They don't know if, the big fund managers, they don't know if they should stay in the equity or they should move their position to protect their assets to, other asset classes, because imagine if you have $100 billion asset, you can't buy Bitcoin or marijuana or AMD. If you want to buy, you have to buy all of them. You have so much money. So how they allocate their assets, it's very important, and that's why they look at the bond market, they look at the commodities, they look at the foreign markets. So that's that's a very complicated asset management. Or if you have $100 billion, you can't day trade. You have to move your money in a safe haven. So that's why, for example, generally when the stock market gets uncertain, they move their money to the bond market, which they have lower return, but they're a little bit safer, or gold or something like that. Anyway, guys, have a good day, and I'll see you tomorrow morning in the chat.